So the August Consumer Sentiment Surveys have just been released. The main takeaway, the RBA's decision to leave rates on hold for a second month in a row has done very little to lift what is still a very dark consumer mood. The Consumer Sentiment Index declined 0.4% in the August month to just 81. It's a very weak read by historical standards. It means that pessimists outnumber optimists by nearly 20%. And over the course of the survey week, the RBA's move led to lower sentiment reads rather than higher. Even the mortgage belt recorded a significant decline in sentiment, down 7%. Some of this seems to be due to doubts about how long this pause will last. We see this as the end of the tightening cycle, but for consumers, they're much less convinced. About 2/3 of consumers expect interest rates to rise further over the next 12 months. A third are bracing for a rise of over 1 percentage point. So there's clearly doubts about the extent to which rates will stay on hold. But it looks like that inflation surge, pressures on incomes are still the dominant factor for consumers, really weighing heavily on sentiment. So we've argued in the past that for consumer sentiment really to rise from here, we'll need to see much more convincing signs that inflation's easing, not just in the measures, but also in consumers' day-to-day lives, and that may not be happening just yet. There were some positives in the detail in August. Views on family finances improved slightly, and some of that looks to be due to the improvement in housing markets flowing through to some quarters. And the responses around the labour market did show improvement as well. And they still look to be, expectations around the labour market still look to be pretty well anchored. You're consistent with a cooling in the labour market rather than a sudden deterioration. But in general, I think the main takeaway here, policy-wise, is that the RBA's decision to extend its pause, 2 months of rates on hold, hasn't seen a significant lift in sentiment. That's bit of a double-edged sword. On the positive side, for the RBA's point of view, it suggests that spending is not about to suddenly bounce back, which would make it more difficult for them to achieve their inflation tasks. But for the consumer, it points to a continuation of this tightening in purse strings that we've seen over the last 9 months, continuing well into the back end of this year.